Good morning. This is George Kachuk with RCM Wealth Advisors reporting to you from the CME Group trading floor in Chicago. Well, here we are at the start of August, and for the equity markets, things are not looking that good. The selling pressure continues. Last week we saw some big pickups in volume as all the indexes pretty much crashed and traded much lower. Okay, so let's talk about the sell-off. This was pretty much led by the Russell 2000 index, which is a small cap index. It's pretty much started correcting since July. So we're looking to see the Russell 2000, it crashed through its 200-day moving average. Last week it was just sitting there. We're hoping it could hold that support, but it couldn't. So the next level of support is about 1080. If the Russell 2000 were to close lower past that 1080 number, this could be very bad for the market. And also what we're seeing is the high yield bonds, which again are something people invest in when they want to go for riskier assets. They also crashed this 200-day moving average. So this combined with the Russell 2000 tells you a little bit that in this market, risk is off. The S&P 500 also closed below its 50-day moving average, and the next level of support should be about 1900, 1880, maybe even go down to 1850. We're watching at those levels. Now the NASDAQ's pretty resilient, although on Friday it did go below its 50-day moving average, and right this morning it's pretty much flirting with those levels. But again, the NASDAQ also, we could see it head a little bit lower, possibly down to the 4250 level. So I'd be watching at those levels. Now, we'll pretty much see this going around the globe too, as we look at the European Monetary Union ETF, the symbol is EZU. That also crashed to its 200-day moving average. And then we see the German index, the German DAX index, also crashed down through its 200-day moving average, and same with the French index. So when you see this kind of thing, knowing it's summer, a little bit obviously telling us that this correction is going to be going on. Now surprisingly, the emerging markets are doing fairly well. If you look at the EEM ETF, that's actually pretty much holding up near its highs, as is the China ETF, the FXI. So that's just something to keep in the back of your mind. So those are all the negatives going forward. We've seen a lot of distribution going on in the equity market, so it is a time to be cautious. Now let's talk about some of the positives. One of the positives is the Chicago Board of Options Exchange, the CBOE put-to-call ratio spiked above 1 on Thursday, and it's also on Friday. That's usually a pretty good indicator of when markets tend to bottom, sometime around that time when that put-to-call ratio gets so high, meaning there's more fear in the market. That's what you want to see. More people are buying puts. It's a good contrarian indicator. So again, that's just something to keep in the back of your mind. Another thing to keep in the back of your mind, although August does tend to be a pretty bad month, it also is a month that has a sort of say a name for a time where we're going to see a lot of turnarounds happening in August. So that's another thing to keep an eye on. So what's an investor supposed to do at this time? Well, you don't want to throw in the towel. You do want to trim back positions, especially positions that aren't making you money. And then you want to start building watch lists of stocks that are acting strong. Because in a correction, the stronger acting stocks will probably be your next leaders coming out of the correction. So I'm going to give you a list of a few stocks that we're watching at, and of course none of these are buy recommendations. You should always consult your investment advisor. But if you look at the biotech stock, space, stocks like Gilead, Celgene, Biogen, all holding up very well near their highs, showing high relative strength. If you look in the auto space, stocks like Tesla. If you look at the internet space, you have stocks like Facebook, Baidu, Beta Holding is Chinese stock, that's holding up very well. In the computer space, you have the stocks like Apple. We continue on to the leisure space, the travel firms like Priceline, Expedia, Ctrip, some of the Chinese travel companies as well. Symbol, Tunia, Tour, T-O-U-R is also a very good company. Leju Holdings, symbol L-E-J-U, also doing very well. So again, Chinese companies and travel companies holding up very well. In the apparel sectors, you have stocks like Under Armour's and Skechers doing very well. And in the restaurant sector, retail sector, you have stocks like Chipotle, Mexican Grill, and Local. So again, none of these are buy recommendations, but these are stocks that are showing high relative strength. So those are kind of stocks you want to keep your eye on. Now, for full disclosure, I do own Gilead, Facebook, and Apple. We're holding on to those because they're still holding pretty well. But of course, we're going to let price and volume be our guide. So if the market starts to correct a little further, we're going to watch out for that. So have a good trading week. This is George Kachuk with RCM Wealth Advisors reporting to you from the CME Group trading floor in Chicago. Good luck.